gold prices are increasing. Over the past few months, we've seen a significant rise in the value of gold. This precious metal, long considered a store of value, is now more sought after than ever. Investors are flocking to gold as a hedge against economic instability. Inflation is a problem worldwide. From groceries to gas, prices are climbing, and the cost of living is becoming more burdensome for many. This global issue is causing concern among economists and everyday people alike as the purchasing power of money diminishes. In the United States, inflation is high. The Federal Reserve has been grappling with how to manage this surge, implementing various monetary policies to try and curb the rising prices. Despite these efforts, the impact on the average American's wallet is palpable. In the Eurozone, inflation is also high. European countries are facing similar challenges, with central banks taking measures to stabilize their economies. The euro has been under pressure, and citizens are feeling the strain as their money buys less and less. This economic situation makes people nervous. Investors look for safety. The stock market's volatility adds to the uncertainty, prompting many to seek out more stable investments. The fear of losing wealth in such unpredictable times drives the search for secure assets. Gold is considered a safe investment. Historically, gold has maintained its value even in times of economic turmoil. Its tangible nature and universal acceptance make it a reliable choice for those looking to protect their wealth. When inflation rises, gold often does well. The correlation between inflation and gold prices is well documented. As the cost of goods and services increases, so does the appeal of gold, which tends to hold its value and even appreciate. This makes gold attractive during uncertain times. Whether it's in the form of coins, bars, or jewelry, gold offers a sense of security. Investors, both large and small, turn to gold to safeguard their assets, making it a shining beacon in a sea of economic uncertainty. Central banks control monetary policy. They lower interest rates to boost economies. These are called accommodative policies. They can lead to inflation. Accommodative policies make investors worry. They fear inflation will erode their savings. They turn to gold as a hedge. Gold can hold its value against inflation. Gold is a safe haven asset. Investors flock to it during crises. It's a store of value. Stock markets can be volatile. Gold offers stability and protection. Bitcoin is a digital asset. It's highly volatile. Gold is more stable. Investors choose gold for its reliability. Central banks jump on the gold bandwagon. In recent years, central banks around the world have been significantly increasing their gold reserves. This trend is not just a fleeting phenomenon, but a strategic move that reflects deeper economic considerations. Central banks are buying gold at unprecedented levels. This surge in gold purchases is driven by a variety of factors, including the desire to hedge against economic instability and to diversify their financial portfolios. They are diversifying their reserves to mitigate risks associated with holding large amounts of any single currency. By adding gold to their reserves, central banks aim to create a more balanced and secure financial foundation. Traditionally, central banks have held reserves in major currencies like the US dollar, the euro, and the yen. However, the inclusion of gold provides a hedge against currency fluctuations and economic downturns, offering a layer of protection that paper currencies cannot. This is a global trend that spans continents and economic systems. From Europe to Asia and from the Americas to Africa, central banks are making substantial investments in gold. Many countries are buying gold to strengthen their economic positions. Nations like China, Russia, and India have been particularly active in increasing their gold reserves, reflecting a broader shift in global economic strategies. It's a sign of the times. The increasing demand for gold is also influencing market trends, driving up prices and making gold an even more valuable asset. Financial analysts are closely watching these developments as they have far-reaching implications for global markets. Central banks are preparing for uncertainty by securing their gold reserves. This preparation is not just about safeguarding assets, but also about ensuring long-term economic stability. As the global economic landscape continues to evolve, gold remains a cornerstone of financial security for central banks worldwide. China and India silpa sa package. Leading the charge. China and India are major gold buyers. China is the world's largest gold consumer. India has a cultural affinity for gold. They see gold as a strategic asset. It reduces reliance on the United States dollar. It strengthens their economic power. The allure of gold, stability, and security. Central banks have reasons to buy gold. First, it's a hedge against inflation. Inflation erodes the value of currencies. Gold can hold its value. Second, gold provides portfolio diversification. It reduces overall risk. It's a hedge against geopolitical uncertainty. A golden future. As we look ahead, the vision of a golden future becomes more tangible. The shimmering skyline represents not just architectural marvels, but also the promise of economic stability and prosperity. The trend of central banks buying gold will continue. Economic uncertainty persists. Inflation remains a concern. In these turbulent times, gold stands out as a beacon of security. Central banks around the world are increasingly turning to gold to safeguard their reserves against the unpredictable tides of the global economy. Gold will be seen as a safe haven. Its intrinsic value and historical significance make it a reliable store of wealth. As other assets fluctuate wildly, gold remains a constant, offering peace of mind to those who invest in it. Central banks will likely increase their gold holdings. This strategic move is not just about diversifying assets, but also about fortifying their financial foundations. By bolstering their gold reserves, central banks aim to create a buffer against potential economic shocks. This will support gold prices. Investors are paying attention. The upward trend in gold prices reflects the growing confidence in its value. Market analysts and investors alike are closely monitoring these developments, recognizing the potential for substantial returns. They are also buying gold. From individual buyers to large-scale investors, the demand for gold is on the rise. People are not just purchasing gold as an investment, but also as a symbol of wealth and security. The future of gold looks bright. As we move forward, gold will continue to play a pivotal role in the global economy. Its enduring value and universal appeal make it a cornerstone of financial stability. The golden future is not just a dream, it is a reality in the making.